Hey, it's Marko here from Fair Realty, Victoria, BC. The Bank of Canada did another jumbo cut this morning, 50 basis points, lowering the overnight lending rate down to 3.25%. Social media in the real estate industry has blown up. Realtors are reposting this, saying it's great news for the market. Sales are going to pick up in the springtime as interest rates come down. I'm not necessarily in the same boat. So first of all, the Bank of Canada is having to do these jumbo cuts because the economy is not looking so hot. Secondly, as rates come down, they're impacting the variable mortgage products. Those are coming down. The 5-year fixed mortgage product rates, I think they're pretty close to a bottom. Right now, they range somewhere from 4 to 4.6%, depending on the product or whether it's an insured or uninsured mortgage. The best I've seen is 3.99% for a five-year fixed mortgage. But this is not a rate everyone can get. I'm seeing on average more like 4.4, 4.5. And when the Bank of Canada made this announcement this morning, the 5-year bond yield actually went up, and that is what the 5-year mortgage rates are based upon. So next year, as the Bank of Canada continues to cut interest rates, I don't think we're going to see the 5-year fixed mortgage interest rates drop much further. Maybe they make it down to 3.79, but I don't think they'll go much lower than that. And that is what most buyers prefer, is a 5-year fixed. The variable is going to continue dropping, but it's probably going to bottom out somewhere about 3.5, 3.7. Kind of the best variable you can get, rate you can get right now is around 4.5 to 4.7. Also keep in mind, interest rates of around 4 to 4.5%. They're not exceptionally low where you're going to see people flying back into the market. Let me give you some context. 2010, so almost 15 years ago, I remember this very vividly. I had a young couple. They were purchasing a house in the Burnside area here in Victoria. The house was $424,000. That was the accepted offer. It had a suite that was rented for $850. And I remember my clients, this young couple phoning me and saying, "Hey Marko, great news. We're ready to remove conditions. Our financing has been improved and we're super happy. BMO has given us a 5-year fixed rate mortgage at 3.99%. That was considered a great rate of around 4%. Guess what the market did from 2010 to 2015 at mortgage interest rates of around 4%? Absolutely nothing. During those 5 years when mortgage interest rates were around 4%, the condo market actually dropped. Single family home prices held in there, but they certainly didn't go up in those 5 years, and that was at 4%. Well, we're down to 4% and close to bottoming out on the 5-year fixed money, somewhere around 4%. It's not like interest rates are going to be dropping down to 2% and everyone's going to be piling back into the market because money is free. 4.5% is still quite a bit of interest you're paying, and you're not paying $424 for a house with a suite anymore in Victoria. You're paying $1.2 million, so the mortgage amounts are huge. Same concept with investors. Investors are not going to jump back into the marketplace when interest rates are 4 to 4.5. And a report came out this morning that the rents on 1-bedroom condos in Victoria or apartments actually dropped. And when have we had rents drop month over month? So why is an investor going to jump into the market to buy cash flow negative property at 4.5% interest rates with dropping rents? So all in all, I'm not in the camp that necessarily the spring is going to be booming. It could be. Markets are very difficult to predict, but there's a lot of other factors going on. Eby this morning, the premier of the province, he said they're putting in a hiring freeze in the public service sector. So things aren't looking so hot. Who knows what Trump's going to do with tariffs? Yes, interest rates are coming down. They're coming down for a reason. If there is going to be higher unemployment, you don't really see housing prices going up when there's more unemployment. That all being said, I do think that there are going to be certain market segments that could see upward price pressure. For example, I've talked about this lots in the last year and a half. That single family home market in the core around $1 million has really dried up in terms of inventory. There's almost nothing left that is livable. Certain niche markets I could see upward pressure, but are we going to have a wide spread? uptick in the market come springtime, where condo sales explode, single family homes explodes, luxury explodes, I wouldn't necessarily bet on it, even as interest rates do come down a bit more. There's a lot of uncertainty right now in the economy, which could really weigh on the market come the springtime. So do lower interest rates improve affordability? Yes, but there's all these other factors taking shape as well. That's it for this week. Marko, Juras, Fair Realty.